Good evening, everyone. This is Wayne, and this is the video version of the trade report for Tuesday, May 1st, 2018. Well, I was expecting some downside action in today's session, and I wasn't disappointed. However, with about an hour and a half left to go in the trading day, the market cut a bid and went green. And then Apple reported earnings a half hour after the close. Stay tuned to find out more. Greetings, everyone, and thank you once again for spending part of your day with me as I go over the price action and activities that took place in the financial market today. Well, this was pretty much a day that was all about Apple. There was nothing else of any level of import in today's session, quite literally. All the emphasis and energy was on Apple. What will Apple do? What will Apple's earnings cause the market to do? How will tomorrow look as a result of Apple's earnings? Will Apple provide enough of a boost to the market to get us out of this morass we've been in? Well, we have the answers at this point. Apple has reported earnings, and it's had some rather significant price action. So let's just look at Apple right out of the chute here without further ado, as they say. Had a little bit of a glitch with my charts. They take a second to load, so bear with me here. So you can see that earnings were a beat, and price action just, went absolutely parabolic here, up to about $178 a share. However, and I'm not sure why, because I haven't been listening to the news, but all of a sudden, they kind of took a little bit of a dive all the way down to about $172 a share, and they're currently trading at just about $173 a share. So, whatever is going to happen, whatever is happening, and what tomorrow will look like, there is still a lot of things that need to be figured out and parsed, apparently, as it relates to Apple's metrics and how the market is perceiving Apple's earnings overall. So we're getting a nice pop, we're getting a nice drop, and now we're getting a little bit of a move back up again. So we're getting not only a mixed bag, but we're getting a full spectrum, price action dynamic out of Apple's earnings. So how is that affecting the rest of the market? Well, at this point, as is always the case this time of the day, the futures market is in its quiet time. It is currently a quarter after the hour, and for another 45 minutes, the futures indexes will not be trading. So we'll see what happens after they reopen at 3 p.m. Pacific time, 6 p.m. Eastern time. So anyway, this is Apple, and of course all of the aftermarket news programs for the financial, the CNBC, the financial station, are all about Apple. So anyway, we'll definitely get some answers, and we could probably just keep Apple's chart here and get all sorts of excitement and activity out of it as it goes through all of its machinations, but we're not going to do that. So as I mentioned in the intro, the S&P 500 and the futures took a pretty significant push to the downside today. They were down almost 20 points at the low of the day. And then I was watching the market. I wasn't at my home office. I was out at an appointment with my wife today. She had a rather elaborate bit of dentistry done today, but that's the beauty of having a mobile device. You can actually keep track of the markets, and I actually did some trading while I was in the dentist office today. But I saw the market starting to recover, and I thought, wait a minute, what is going on here? I looked for some news. There really wasn't any. I think what happened here is the prospect of Apple beating earnings and the market potentially going higher as a result of Apple's earnings getting a fire lit under the bulls in this market just was a self-fulfilling prophecy that created an upside bit of action. Little bit of a pullback for those who got in down here and wanted to get out here for some profit taking, and then some more some more price action into the close to the upside. So the markets made a really nice recovery today, closing in the green. And actually, if we take a look at what happened today, now I say the markets closed in the green. That's actually a misnomer. The Dow closed down 64 points. The NASDAQ closed up 64 points. So we've got one up and one down. The S&P closed up 6 3/4 points. And the Russell 2000 closed up about 8.5 points. So technically we did close mixed. Having one of the four indexes close lower and the other three close higher is, for all intents and purposes, a mixed close. But predominantly, the markets did recover. The indexes did move higher, and most of them did close in the green. So there we have, a rather bullish end to a day that started off looking really rough. In fact, the Dow was down over 300 points at the lowest point today. But the NASDAQ is really what brought this market back to life again. And again, remember yesterday, there was kind of this down move and then this sideways bit of action in the NASDAQ. Well, today, we never really got any. We started off with the sideways action and then ended up with a nice pop to the upside. This is the Dow, and we got a nice push to the downside and then a decent recovery into the close. Haven't seen a V bottom in a while. And then the Russell, down, up, sideways, and then way up into the close. Now, what does this mean going forward? Is there anything that we can extrapolate, surmise from this price action? No, there really isn't. This is just one day's worth of price action that I have come to learn is, for all intents and purposes, occurring in a vacuum. We are in a sideways market right now, and if we can pull up a daily chart of the ES, which is the S&P futures, go ahead and load that up here, and let me just get a little bit of action there from my alerts. And I do want to change this to a daily time frame. That way we can have a little bit better perspective. So what we've been doing, and we've looked at this chart before, we've basically been trading sideways for a while now. And certainly we've had some, rather significant ups and downs. But we've got this ever tightening wedge that at some point is going to break one way or the other. That's what these types of chart patterns do. They weave their way until they get really tight, and then they either explode to the upside or they explode to the downside. At this point, there's still too much time left to really make any sort of a judgment call about which direction this thing might move. And just because we're higher now, and just because we went higher into the close, unfortunately, really doesn't mean that we're going to go higher tomorrow. And we did go lower at the beginning of today's session, and it really did look like we were going to head south even further. But I believe that the hype and the excitement surrounding Apple's earnings kind of brought this market a little bit of a breath of life, and it went higher into the close. And now that Apple's reported, it's gone higher. And it is, in fact, let's just take a look at it and see what it's doing, if it's doing anything different than it was the last time we looked at it. Again, this is the daily chart. Got to get my cursor here. Where is that? There it is. Okay. Switch it over to what I need in order to get the selection. Come on. There it is. I was like looking at the 15-minute chart for what's going on as far as earnings are concerned, because that provides me with the extended session. So we're stabilizing here right about $174 a share, which is about $5 a share higher than where Apple closed the regular session. So it's a pretty decent bit of price action going on, even though we did come down after a rather significant spike in Apple. It looks like it'll probably settle around 174, 175. We'll see how things go tomorrow morning. If this follows the pattern of other stocks that have reported earnings, we should see Apple go lower tomorrow. I know that sounds pessimistic and almost, I don't know, sacrilegious. But, I mean, Amazon did it. Google did it. Facebook didn't do it. That was one of the exceptions to the rule. And actually, I gotta be forthright and honest here. Netflix didn't do it either the next day, but it really sold off on subsequent days. In fact, if we just kind of take a step back here, and we can bring a chart of Netflix up here, just as a reminder of what happened on Netflix's earnings. So Netflix popped open. Let me get my cursor here. Netflix popped open on earnings, went higher, stayed higher, pulled back a little bit, and this was over like 2-3 days now, and then all of a sudden it started selling. Now, on this pullback here, I thought for sure it was going to go back up again, but no, it headed south, and I thought, okay, so it's going to look for closing this gap, and oh boy, did it, and more. And now it's just kind of settled into this range below where it opened the day that it reported earnings. So Netflix has, I don't want to say it's collapsed because it's still doing very well. It's still elevated rather nicely. But this is the type of thing that we can look for as it relates to Apple. And if I could indulge you, or if you could indulge me, I guess I should say, we can look at Google and remember what it did on its earnings. So it tried to go higher in the extended session, and then it kind of settled back to nothingness, and then it opened up lower the next day and went below the 50-day moving average and closed. And the same thing the next day, it couldn't go higher. Then we had a nice up move, but then we moved lower again. Then we moved lower again, both times closing below the 50-day moving average. And today, into the close, Google caught a bid to close above the 50-day moving average. These movements are not bullish. These are kind of last gasp desperation kinds of moves, folks. And we're in a sideways market now, but a lot of these previous market leaders are not performing well, even in a sideways market. If this was a downside market, these things would really be collapsing. So where are our leaders going to come from going forward? The banks? That's possible. With interest rates rising, banks' earnings should look good going forward, and banks should be able to, come to the fore and become new market leaders. Will that happen? Remains to be seen. Right now, all news seems to be bad news. Markets aren't catching a bid even on the best possible news there is. We've got world peace. We've got the best earnings we've had in 8 years out of the S&P 500 companies. We've got tremendous forward guidance. It's a remarkable environment of earnings, but the market can't go higher. The market's sitting and basically running in place. And it can only do that for so long before it wears itself out and just collapses. So, what am I looking forward to tomorrow? I think the probabilities are that we go lower tomorrow. Honestly, we might open up a little higher on Apple's earnings, kind of, get a little bit of momentum through the evening in the Asian and European markets. But if we are to take anything from what we've already experienced and have gone through over the last couple of weeks of earnings, there's no reason why we should expect Apple to perform any differently. So that means lower prices. Now, what I did, kind of counterintuitively, going into the close from the dentist office on my mobile device trading, I bought some S&P futures call options. So I was looking for the market to go higher, and it did. And I also bought some DIA, which is the Dow ETF. I bought some DIA calls as well, way far out, about 80 days till expiration. And I bought 10 of those at the 265 strike price. So I didn't pay very much for them. But even if we do get a market that pulls back dramatically, I think it's going to do that because there's just this mandate, this edict that says We've got to go lower before we go higher. And at some point, there's going to be a switch that's flicked, and it's going to bring us a new source of energy for this market to go higher. When that happens, what causes it, at this point, is unknown. We're in a very unusual place as it relates to the energy of the market. Most of the market participants who are involved in this current market have never seen a market environment like the one we're in. A generation of market participants is usually an 8-year generational cycle. So from 2009-ish, basically right after the financial crisis ended, we didn't know it was ending, but it did. We still had some issues to work out, and we did, and the Fed came in and provided quantitative easing, and that's a whole nother story. But we've had a Fed supported market for many years that has just, for all intents and purposes, gone higher. And now we're in a position where this market is now beginning to react and act upon its own accord without any other exterior or external influences like the Fed coming in and moving the market higher and supporting it when it falls. And what does that mean? That means that we're at risk. The downside is a very real potential for this market at this point. And as we come to the end of earnings season, that presents a very intense and powerful risk for those who would believe that we're still in a bull market. So with that being said, we still have a little bit of time left in this week. And then we have the beginning of next week, which basically takes us past the bulk of earnings, and we begin to digest all the information from the earnings season, and we look to the next phase of the market, whatever that is. Tomorrow we have the FOMC meeting announcement on interest rates. It's expected that the Fed will not raise interest rates tomorrow, but that they will raise interest rates in the June Fed meeting. And then Friday we have a job number, which I have no doubt will move this market in one way, shape, or form. And again, if we are to look at this market and say this market is perceiving all news as bad news or as challenging news, however you want to frame it, we actually should be going relatively lower going into the end of the week. So we'll see. And just real quick, I wanted to give you I told you I bought some DIA calls, and I bought some S&P futures call options. But what I also did earlier in the day, and I did this right about here, I sold strangles in the S&P futures. Now, what are strangles? I am going to do a video about strangles because that would take far too much time for me to explain it here. But I'm going to post that to Facebook, just like I'm going to be posting this video to Facebook. But I'm going to make it a separate video, and I'm also going to post it to my YouTube channel. And I would like to request that when you watch one of my videos, that you like it or just acknowledge that you watched it in some way, shape, or form. I'd love to hear from you. Love for you to make a comment, and then we can have an interaction. And on YouTube, if you do watch the video on YouTube, if you aren't already a subscriber, if you wouldn't mind subscribing to my channel, leaving a comment, and liking the video as well. The engagement dynamic provides me with a little bit more favor, if you will, on the Facebook and YouTube platforms. And I hope I'm providing you all with enough value in these videos so that you feel as if it's within your purview to give me a like. And if you don't, I'd like to know why, because I want to provide that value that I would like to believe I am providing. But that being said, at this point, I will say trade safe, trade what you see if you choose to trade at all. Good night and good trading.